Funding for Market Journal is provided by the Nebraska Corn Board.
This is Jane. She thinks she's just filling her car, but she's also filling the air with cancer-causing toxic chemicals used to boost octane in gas. What doesn't burn in the engine enters the air and your lungs, even your heart and brain. Bad for everyone, especially kids. Ethanol is a natural octane booster, clean burning and non-toxic. More ethanol means less scary stuff in our gas and in the air we breathe. And that makes your choice pretty plain, Jane. American Ethanol, cleaner air for Nebraska.
Market Journal, television for agricultural business decisions, is a presentation of the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board.
Welcome to this week's edition of Market Journal. I'm Jeff Wilkerson. On this episode, Mike Briggs talks about margins in the feedlot. Brent Gloy discusses the health of the ag economy. Cody Creech reviews Nebraska's winter wheat crop, and Rodrigo Werle explains research projects with corn and soybeans in central Nebraska. Mike Briggs is our cattle market analyst this week. Nebraska was the top commercial red meat producer in the country for June. This state accounted for more than 16% of the U.S. total, ahead of Iowa in second place and Kansas and Texas in third and fourth. While its hog output was up slightly for the month, Nebraska's cattle production was 18% higher than June 2015. The USDA's latest cattle on feed report showed the nation's inventory, placements, and marketings all ahead of a year ago. Nebraska's marketings for the month were 6% higher, but its inventory and placements were both lower. We talked with Mike Wednesday morning about the recent data, but started by asking about weather's effect on cattle performance during a recent hot stretch in July.
It's been pretty tough with the state. Now last week was really bad, but we got kind of lucky. A lot of the times there was wind. And the other thing you have a little different with this heat spell usually than you do in the May or June ones, the cattle have acclimated themselves to it. We lost 5 cattle. Now we have sprinklers, so maybe our losses were, from what I've heard, quite a bit less than others. But just the fact that the cattle are acclimated to it, those big heat surges like we have in early June where you have the massive losses, cattle haven't become acclimated to it. They're doing okay, but it was tough. It knocked them off feed, and you had some digestive issues and stuff, but for the most part we got through it pretty good.
Let's start off talking about the live market. Tell me why we've been on this slide.
Great question. My theory is captive supply. I had to explain this to my kids the other day.
I'm sure they enjoyed that.
They didn't understand. I said, okay, let's go with this way. You need 100 Kit Kats to run your little Kit Kat store, and the other dealers give you 85 of them, but they say, you don't have to pay for them. You pay me whatever you have to pay for those last 15. And I'm like, so how much are you going to pay for the last 15? They picked right up on that, but apparently as a cattle feeder, that's a hard deal. We don't understand that. Because you've got captive supplies up in the 70 or 80% area. It's really gotten to be a problem because the packer has enough cattle if he chooses to not buy any. And that's kind of what he's been doing. Well, in doing so, the price just gets a little bit lower and a little bit lower. Well, all those cattle are priced off the weekly average. Well, they're not stupid. They're going to try to pay less so they can pay less for the whole deal. And so it's really frustrating right now. The cattleman is his worst enemy. We have got to stop having so much captive supply and make these guys have to buy them. Since they don't have to buy them, the price just keeps working lower and working lower and working lower. And until that stops, we've got a problem.
What are margins like in the feedlot?
Big negatives yet, and I don't know when we're going to see positive margins. We may not see positive margins till fourth quarter, or you may have to get clear into second quarter of next year. And the only reason you're going to make that money is because you've hammered that rancher so bad on his calves, because you're going to have to buy margin. That's the thing that's so surprising to me. After all the money that's been lost in this industry, that you still get cattle offered to you that are $50, $60 losers, it just amazes me.
If you look at that cattle on feed report, specifically in Nebraska, 59% of the cattle Nebraska placed were over 800 pounds. Why is it happening like that?
That's a function of a lot of things. You had a lot of backgrounders, didn't like the calf price last year because it was lower than previous year, or ranchers, so they backgrounded the cattle. Well, just like the fat cattle market, it just kept going down, so when it was time to sell them as 800 pounders or whenever they typically would sell in January, they were still huge losers. Didn't want to do that, so they fed them a little longer. Or we put them on grass because we had a lot of rain, had a lot of grass, so people couldn't sell those cattle and make any money. Thought, well, I'm going to put them on grass. So they put them on grass. Well, now they're big, and the cattle market still is terrible, and they're still going to have a poor price, but they've fed them to, they've backgrounded to a point where they got to let go of them.
We saw in that slaughter report, production was up 10% in June, but meat prices, ground beef reversed a 6-month slide, retail beef increase is the highest since March. Why is there that discrepancy?
You have one of the biggest spreads between cash cattle price and retail price that we've ever seen. And it's just a simple fact. Retailers are not lowering their prices. They have enormous margins. And when the beef board goes and talks to them, or cattlemen talk to them, there's, well, beef's moving just fine at this price. And we have to make our money back from when we lost all our money when it ran up so fast. But the point being is they're very good at adjusting price to the demand, and it's moving here, so they're not going to move it down.
Right, they have to be selling something, otherwise the price would
Exactly.
come down.
I think customers adjusted a little bit to the higher price. The economy's doing a little better, but retail beef needs to be nowhere near where it is. Nowhere near. In fact, that's what's disappointing, and it goes back to the captive supply deal. Cash cattle should be in the 125 to 135 if you look at retail price. We're 10 or 15 bucks below that because of the captive cattle.
All right, where do markets move here in August?
I'm hoping we put in our low last week at 114. The market's got to close this week. The August contract needs to close Friday above 111.20, and that signals a technical change, and hopefully then the funds will reverse course here and we'll start going back up. I don't think, we could have a pretty good, we could have a $10 or $15 rally, and it really doesn't mean that much. It would sure help us out here. In fact, I think that would probably turn us into some black margins it would on some cattle we have here. And wouldn't need to raise the retail price at all. It's just going to squeeze the packer and the retail margins. But those guys have huge margins right now. They can afford to let some of that go.
Next week, Darren Newsom from DTN will join us to look at corn and soybean markets ahead of the August crop report. In about a month, the USDA will release its updated forecast for U.S. net farm income in 2016. Its current projection is about 56% below the high reached in 2013 and 3% lower than last year. To learn about the impacts of tighter, if not negative, margins over a sustained period of time, we talked last week with Brent Gloy. Brent is a visiting professor at Purdue and currently operates his family farm in southwest Nebraska. Along with Purdue ag economist David Widmar, Brent writes for ageconomist.com. To start our discussion about the overall health of the ag economy, we asked about how lower returns were affecting producers.
We're really in the midst of what I would say is the biggest downturn in farm economics that we've seen probably in most our lives anyway. And I think the signs are starting to show throughout, for everything from capital investment to farmland values to just a little bit of financial stress starting to rear its head. So, this is kind of 3 years of a downturn. We're looking at maybe another. So things are starting to get pretty tough out here in farm country now.
Let's talk about some of the costs. Let's start with fixed costs. And I had watched a video you did from about a year ago talking about the importance of keeping an eye on fixed costs and controlling them if margins were going to be tight. Tell me what role they play in the budget.
Right. When you look at where farmers spend their money, you got about 40%, I call it 60-40 rule. About 40% of your expenses are variable expenses and 60% are fixed. And everybody always, your first inclination is to manage the 40% variable costs. And there's nothing wrong with that, but we can't ignore that 60%. And in the downturn like this, the reality is that 60% has to come down. So cash rents, land values, machinery investment. Those things are starting to come down, but they're very reluctant to do so.
Yeah, tell me more about whether or not they're coming down, in which areas they're coming down.
I think the data we see now coming in from the University of Nebraska, Iowa State, other areas, Kansas City Fed, Chicago Fed, all point to lower farmland values. I mean, maybe 8% down in Iowa, another 6 or 7 this year. Nebraska's starting to show some declines. So land values are starting to react downward. And it's not that that's a good thing. I like to see land values really high too, because it means the economy is really going along. But in this time period, that's where the pressure really is. And we're starting to see that happen.
Are there signs that variable costs are coming down at all?
Yeah, variable costs, actually this year we saw the first time where we started to really see some improvement in cost structure, particularly with fertilizer prices this year, down maybe 15 to 20% this year. And so I think that's a good sign. We're starting to see those costs react, and people's cost structure is getting better. Unfortunately, the prices keep getting worse. And so we're still going to have work to do. We had quite a bit of savings on fuel this year, and as I said, fertilizer, and I think we're going to continue probably to see some pressure on those variable costs to come down.
There has been so much focus on interest rates and the Fed's decision to not move those rates. We've talked about it from an export perspective and the strength of the dollar, but to the farmer on the operation, how much impact is there?
Yeah, interest rates have been one of those things that, boy, they get a lot of attention, and in part because it seemed like forever since they actually went up. Farm level interest rates still really, really low, and that's a good thing supporting agriculture. I don't think even 1 or 2% increase, 100-200 basis points, is not going to blow a hole through a lot of people's budgets on the operating side. The thing where they're really important is underpinning the land market. These low interest rates help support farmland values, and so we want to pay a lot of attention to it. But in the short term, long-term interest rates are as low as they've been, and they continue to provide support to our farmland market. So something to really keep an eye on. But right now they're not moving much, and even though every economist has been saying for the past 5 years they're going up, they still seem to be hanging in there pretty low.
You just finished wheat harvest here, and you've done some work on your site about overall wheat acres. Tell me about the future for wheat.
Yeah, wheat, the economics of wheat are really tough right now. We're looking at cash prices around $3 a bushel. I just scanned UNL's crop budgets this morning. They show cash costs. I think the lowest cash cost they showed was somewhere around $3.30, and total costs range from everywhere from like $5.15 to over $7. So wheat is just not really a very attractive crop right now. And we've seen over the last 30 years, tremendous amount of acres go out of wheat production. The statistic David came up with that I thought was really interesting, 800,000 acres a year decline in wheat over the last 30 years. To put that in perspective, Kansas grew about 8.5 million acres of wheat last year. So in other words, every 10 years we've lost a wheat production area the size of Kansas. That's kind of crazy to think about how big that decline has been. But unless economics improve in wheat, I think we're still going to struggle to keep wheat in production.
I know we're early, but what does the outlook look like for 2017?
Yeah, 2017 is bearing down on us, even though we're a long ways from harvesting this crop, but people are already starting to do some planning. And when we look at the budgets, it's looking pretty tough, I think, for 2017. Again, another year of intense pressure on costs. Fertilizer prices, it's going to be really interesting because we had a lot more acres of corn planted this year. Corn is very fertilizer intensive. We'll have to watch and see where that goes. Right now, they seem a little soft, but I wouldn't expect to see the kinds of declines we saw last year in fertilizer. More pressure on equipment, more pressure on land values, but the budgets, again, are not looking great for next year, so I'd look for intense pressure on cash rents and other things.
Anything farmers should do actively to make sure they're staying ahead of the game here?
Absolutely. I mean, crunch your numbers, understand your financial position. We're in the third year of this downturn. It's looking like another year's coming with these big commodity crops we're growing. Commodity prices don't look so good. It's really important to stay on top of where you're at on your finances, understand your cost of production. So when you get a chance to market crops at prices above your cost of production, you know, it's a good opportunity to take that. But you can't do it if you don't know where your costs are at. So spend some time with your finances, spend some time with your lenders is really important in this environment.
You can read more from Brent online at ageconomist.com. His most recent post details falling net farm incomes. Nebraska's winter wheat growers are expected to produce 60 million bushels this season on an average yield of 50 bushels per acre. That output is up 30% from 2015, while the yield is up 12 bushels per acre and would be a new record for the state. Producers here have harvested 92% of the crop according to the latest progress report. That's a jump of 17 points from a week ago and 18 points ahead of the state's 5-year average. Farmers across the country are bringing in a crop that's expected to be 19% bigger than a year ago, with prices significantly cheaper. To get a recap of the growing season in western Nebraska, we talked with Nebraska Extension's Cody Creech in Scottsbluff last week. We started by asking for an update on harvest progress in that area of the country.
Well, I was just coming back from Wyoming, and I actually passed a few harvest crews going the other direction, heading up to Montana. So it's really wrapping up out here. I think by the next week or so, we should be on the tail end of it.
What are we looking at for yields?
The producers across the state have been pretty pleased with what they've been getting off the fields. For irrigated ground, most producers are getting around that 100 bushel range, which is nice to see. The dryland guys are starting to push that 50 bushel range. For the dryland guys, that makes them pretty happy.
What things led to such a good year for wheat producers?
Well, this year we had a number of things that went right for us. First off, the wheat came out of the winter really good. If you remember in 2015, we had a lot of winter kill and a lot of poor thin stands. This year we almost had no winter kill, so we had really strong stands, and then we had lots of moisture in the winter, lots of precipitation in the spring. And so if you look back over the last 5 years as far as the USDA soil moisture ratings, we haven't had a year like this in at least the last 5 years.
What about the protein content for this year's crop?
The protein is one aspect of the wheat harvest that has producers a little bit down. With the higher wheat yields, that tends to fall. Most folks are still in that 9 to 10% range, which is below the level they need to be. They need to be about that 11.5 range. However, those folks that did manage their wheat crop correctly were able to achieve 13-14% protein this year.
We talked a lot about the good stuff that happened to this year's crop. Were there any disease issues or other problems that growers did face? The
biggest one we had out here in the Panhandle was the rust issue. We did better than in 2015. In 2015, we probably only had about 25% of the producers actually spray a fungicide on their wheat. This year, I would think we're closer to 75% that we're actually able to get out there and spray, which helped a lot. We did have a few isolated areas that had a lot of rust move in, and those areas definitely saw that yield drag of probably 20 bushel. Yields were around 25 to 30 bushel on those fields that had a lot of rust out there.
From your perspective, anything that farmers should keep in mind when they think about next year's winter wheat crop?
Well, the biggest thing with the wheat crop, especially with the prices the way they are, is just being able to think about the right fertility treatments out there. This year we suffered on the protein because we didn't have enough fertility out there. But being able to make decisions on the fly, really just being out scouting. Folks need to be out scouting for those diseases. When they first appear, especially the rust, we can make timely applications. That's a real struggle with the rust. The other thing would be for the fertility. If we get a lot of rain in the spring, folks need to go out there and make another application of nitrogen to make sure we have the correct protein levels.
Some producers who don't grow wheat or aren't used to the rotation probably look at the prices now and wonder why you would even produce it. What's the answer to that?
Well, wheat's a really good fit for a lot of crop rotations. It actually fits well, especially in the dryland setting, because it is a really good water user. It's highly efficient, and then it produces a lot of residue. You see out in this field here that we have almost waist-high wheat. It produces great residue, so that for the following year's crop, whether it be dryland corn or sunflowers or whatever it is, it really conserves the soil moisture really well, so we can grow those other crops out here.
Learn more about weed control after harvest. You can view our interview with Bob Klein from the July 15th episode of Market Journal. The July Nebraska farmer says even after a 5-inch rain, one of Del Fike's cover crop fields could still absorb 8 inches of water per hour. It took 10 years of continuous cover crop rotation and cattle grazing to get there, but that field also saw an increase in soil organic matter from 2.6% to 6.9% over that time. Fike's farm west of Lincoln has been turned into a research site to test different cocktail mixes and the benefits they bring. You can read about the benefits Fike is seeing in the July Nebraska Farmer. Rodrigo Werle is a new Nebraska Extension cropping system specialist located at the West Central Research and Extension Center in North Platte. Originally from Brazil, Rodrigo came to the U.S. for an internship and recently finished his Ph.D. from the University of Nebraska. We talked with him last week at the center about his ongoing research there, including a look at how weed control efforts could be having spillover effects on soybean performance.
Herbicide-resistant weeds have become a major concern in soybean and corn management in Nebraska. For many years, we were using glyphosate as our primary herbicide option, but because of the occurrence of this herbicide-resistant weeds, we're now recommending growers to start using more and more soil-applied herbicides that have residual activity. The problem there is that we haven't done a whole lot of studies looking at variety response to this herbicide. So this is what we're doing here now. We're testing the response of 22 commonly used varieties across the Midwest to 2 different soil-applied herbicides. And what happens there, oftentimes we do see some injury early in the season, especially if you have low organic matter, if soil conditions are a little cooler, and then if you get a good amount of precipitation right at emergence time, sometimes you see some injury. And our question is that injury going to is going to reduce your yield potential at the end of the season? So this is exactly what we are investigating here.
One of the other research topics you're looking at is the use of cover crops in a corn-wheat fallow rotation. Why do people want to use them, and also what are they concerned about if they use them?
That's correct. So that's a project we're going to be starting this fall here. There are some concerns about including cover crops in this part of the state. Water is the major limiting factor here, and sometimes if you add those cover crops, growers are concerned that those cover crops are going to be uptaking the water that was supposed to be available for the subsequent crop there. So what we're going to be doing here, we're going to be planting different species of cover crops. We're going to have legumes, we're going to have grass, brassicas, and what we want to do, we want to plant them right after the wheat harvest, and we want to see whether we get some weed suppression, and we want to see whether those can help us, scavenging some of the nutrients from the soil. But then the major question that we're asking is, are those cover crops going to impact the corn yield next year? Because if they are, growers are not likely to adopt that. But if we find, cover crops that are well adapted and that are not going to, change the yield of your corn, there's a higher likelihood that growers may adopt those.
And finally, one of the things you're looking at as well is using alternative, I guess we could say, crops. Tell me why you might want to look at that.
That's correct. So field peas has gained a lot of attention over the years. There is a team of researchers and educators that are looking into incorporating field peas as part of that corn wheat fallow rotation strategy. So perhaps putting that field peas early in the spring before you plant your wheat in the fall, there in the summer, in the fall. And the reason there is going to add another source of revenue there. So we're doing some agronomic as well as some economic research to see whether there's a good feed for field peas. We hopefully there will be some investment, return to the investment there, and we hope that field pea there, if properly managed, will not impact the yield of the subsequent wheat crop.
Now with this week's weather forecast, here's Nebraska Extension ag climatologist Al Dutcher.
Well, folks, here again for the weekly forecast. And during this last week, we dealt with a couple precipitation events of significant magnitude. One was last weekend, and then, of course, the other one was Wednesday, as we had systems moving from a northwest to southeast flow, impacting more of western Nebraska, particularly north central up through west central Nebraska. Was the biggest winter in terms of total precipitation for the period. Wednesday night was the biggest widespread heavy precipitation event for northern Nebraska, where we've seen 1 inch plus totals from portions of the eastern panhandle through north central Nebraska. But unfortunately, as these systems moved toward the south, we did see them dissipate such that we got to the 80 corridor, hardly any, if at all precipitation was reported, and that leads us to an increase in the drought monitor this week in terms of the abnormally dry conditions over south central southeast Nebraska, and moderate drought conditions now expanded across a good portion of south central into central Nebraska, and also including the western half of the panhandle north of essentially Scotts Bluff, where moderate drought conditions have been introduced. So we could use a couple good rainfalls. Now, in terms of the outlook, CPC is indicating that we may have some relief in store. If we are to believe them, we will see the warm temperatures stay to our south for the month of August, where we will be fairly close to equal chances of normal, above normal, or below normal temperatures. And this is a reflection of the troughing pattern that's been pretty persistent across the Great Lakes region, bringing us in these shots of cool air that beats down the ridge. Now, as we go into precipitation, a very aggressive precipitation pattern from the northwest to the southeast. The best chances for above normal moisture, of course, situated across the Dakotas. I don't know if CPC is correct in bringing this precipitation all the way southward through eastern Kansas. It would be nice if this does verify, would alleviate many of the problems we've had with short-term dryness issues, but I think they may be a little bit over-aggressive. Time will tell. In terms of the fall forecast, August through October, we're looking at above normal temperatures nationwide with the best chances across the central and southern Rockies. In terms of precipitation, once again, the Dakotas are highlighted with above normal precipitation, but I think most of this within this forecast period is associated with the month of August. Now, as we look at the current conditions today, what we are noticing is that we have a trough move that's moving across the central plains and is starting to strengthen as it gets into the Great Lakes region. Therefore, we're starting to see some precipitation chances increase today across north central northeast Nebraska, lesser chances across east central and southeast Nebraska until we get later tonight into tomorrow morning, where we see this energy still residing across east central southeast Nebraska, giving us a chance for some shower activity, but nothing major in terms of high quality precipitation. To our west, the ridge starts to build in, drier conditions start to move in earnest as we get into Monday, and the ridge pattern starts to develop across central Kansas, and that will dominate the remainder of the week with warm temperatures to well above normal temperatures. So we'll be looking at 90s statewide, and as we go into Tuesday, potentially mid to upper 90s with an isolated 100-degree reading not out of the question across south central southeast eastern portions of the state. And as we get into Wednesday, we see that a little bit of energy makes it over the eastern slopes of the Rocky Mountains, so there could be some thunderstorm development in western Nebraska. And as we get into Thursday, we still see the drying pattern associated with this ridge, but the ridge starts to show signs of breaking down as the trough moves toward the Great Lakes and starts to push the heat to our south. So by the time we get to Friday, we start to see this trough digging farther deeper, and for next weekend that means a much cooler conditions moving in with an increasing chance for precipitation.
Thanks, Al. Today's interviews are available individually on the Market Journal website and through the Market Journal mobile app. They include information on cattle markets, the ag economy, Nebraska's wheat harvest, and research on residual herbicides. As always, you can keep up with Market Journal during the week by following us on Instagram, Facebook, and Twitter. Next week, Darren Newsom will be our corn and soybean market analyst, and we'll show you how Nebraska's National Agricultural Statistics Service tallies data for its objective yield survey used in USDA crop reports. Until then, thanks for watching. I'm Jeff Wilkerson. We'll see you next week.
Join Market Journal online at marketjournal.unl.edu. You can also follow us on Twitter, Instagram, and Facebook. Promotional support is provided by the Nebraska Farmer Magazine, and major funding for Market Journal is provided by the Nebraska Corn Board. Market Journal is produced by the University of Nebraska-Lincoln's Institute of Agriculture and Natural Resources.